Hello, it's basically Sadil speaking, Mr. Intermarket Analysis, bringing you the review of the FTSE 100, going into what are we on today? We're on it's a Tuesday today, so we're going into Wednesday's trading, the 11th of December. Okay, folks, so let's see exactly what's happening here then. So okay, let's cover the fundamentals today, basically what happened over the last 24 hours. Basically we had the Chinese data out overnight. Okay, from my interpretation it was mixed, because we had strong retail sales. Well, retail sales was slightly stronger, came in line with both data came out in line with expectations, although you could have argued that it didn't beat expectations, and one component was lagging as well. So from that perspective, it was already priced in to a large degree, and really what matters at the end of the day is a reaction in Shanghai, and the Shanghai index, and the Shanghai index closed flat. Okay, so basically because the Shanghai index closed flat, okay, from that I presume that the data itself was interpreted as being negative. Because the data came in line expectations, okay, it means that there's less ability or less scope there for them to ease or pass through some stimulus. And obviously, given the fact that we have QE junkies uniting all over the world based on stimulus, and the market's constantly short squeezing higher because the central banks and Bernanke has your back, that type of mentality at present. So it failed to, for the rally itself failed to transpire. So from that perspective, initially I had a short bias in the FTSE, so I'll give you an insight on why I thought the FTSE itself would go lower, because I was expecting some consolidation. So if I go to my 10-minute chart, okay, so I was short in the morning around the 6548 level. I didn't expect the gap fill to be closed. Even if it did, it will definitely hold a solid resistance, and obviously the markets to go lower. And I had a potential H&S formation here in the morning. So you had the left shoulder here, you had the head up here, and then obviously you were creating this right shoulder here around the 6458 level, 6455. And then obviously we go lower and close the gap. Okay, that obviously didn't transpire because the market short squeezed. So the way in which the market interpreted the data was that it was bullish for commodities. So that's hence the reason why you had a euro rally, oil rally, gold rally. Okay, quite a substantial rally as well, not just a meager rally, substantial rally. Okay, and the FTSE itself went up to 6575 level. Okay, so I had a short position. Now my stop loss is at 6580, so thank God for that. My stop loss was above obviously the last pivot high, and my stop loss was not hit. The market then went down. I closed my short positions. I then went long subsequently, because obviously the market had tested 6575, and obviously the appetite of the bulls was still strong, because they were interpreting the data as being bullish, given the fact that Kiwi dollar and Aussie dollar are quite bullish today. Okay, so that generally means a risk on type environment, obviously given the fact that the Japanese yen, USD yen, JPY and Euro JPY are into support as well. So I certainly went long. Unfortunately I got stopped out. Why? Because of the Volcker rule. Okay, basically if you look at the CBS Market Watch main website, 3 reasons why the Volcker rule can't fix Wall Street. Okay, there's a comment on there. Wall Street's top 5 regulators set to vote Tuesday, so i.e. today, on the core piece of the 2010 financial overhaul that passed in the wake of the financial crisis. Under the much toiled over Volcker rule, we may get regulations in place by 2015. That's if obviously etc, if banks don't sue the pants off the regulators and hold up the law. So obviously the banks are under pressure. Okay, now let's have a look at Barclays, see exactly what's happening there. You do have an inverted head and shoulders on Barclays for those that want to trade. There's an unfilled gap there at £3, which I'll be sharing in the fundamental analysis service soon. Certainly a good time to enter. So obviously you can see here the FTSE itself. Look, basically 11:30, you had a sell-off, quite a substantial one, 267 to 263, so 4p off the price of Barclays, and obviously that put pressure on the market itself. So initially the Volcker rule was interpreted as being bearish for markets, because it obviously, given the article there, if you carry on reading, basically it shuns the ability there for individuals to take on excessive risk. Okay, so again, that's quite interesting as well. So okay, so keep an eye on that, on for that as well. Okay, so That obviously the Volcker rule basically created the volatility, created the uncertainty, etc., and caused the markets to go into a bit of a frenzy and a free fall. Okay, and then eventually it recovered, and I managed to get out of my DAX and FTSE longs. So so far this week I'm 133 points and counting, which is not bad considering we've only had 36 hours of trading so far. So life is good. Okay, looking to obviously exceed my weekly count of 200 points. Okay, so let's have a look at the FTSE 100 now. So giving you the insight there with regards to the fundamentals. We did also have the obviously the industrial production data that came in line. Okay, both industrial production month on month, year on year, both came in line with forecasts. No real surprises there. Although the manufacturing production data year on year did slightly miss expectations. Okay. And obviously the trade balance itself came in slightly weaker as well. So obviously that's put pressure on sterling, which in turn obviously helps the actual FTSE to move higher. Obviously prior to that data for sterling itself was rallying higher, hence the reason why I expected and also Euro GBP was coming under pressure as well, hence the reason why I expected some resistance or some sort of turbulence on the FTSE early morning. And given the fact that Asian markets were down overnight, Shanghai flat, and obviously the Nikkei was negative, so obviously that didn't have an effect, unfortunately. And given the fact that the Nasdaq is at resistance, that again didn't have much of an effect. So strange times. Okay, so we can only trade what we see. Okay, and using my intermarket analysis. But again, okay, yes, I got stopped out -30 on the FTSE today, but alternatively I had good trades elsewhere. And like I said, I'm currently sitting on 133 points for the week. Okay, so let's have a look at. Let's go back now and let's have a look. This is just the economic calendar. If you're those of you that are interested, and this is the calendar I observe, the one that I watch day in day out at Daily FX. So that's something that you might be interested in. Daily FX, certainly a good calendar there. Just keep an eye on what's happening. Okay, so basically what do we have here? Basically the 200 MA is the support level. Okay, so I expected a retracement given the fact that we were near the 50% or just between 38 and 50% resistance. Okay, expecting some sort of consolidation on the bullish engulfing candle, and following day obviously we followed through. The 200 MA will be acting as support for now. Okay, so that should definitely hold a solid support on the FTSE itself. Obviously we've got this trend line going up from below, certainly that's again is acting as support. Okay, and we need to touch the upper channel, so we need to go and hit around the 6600 level, and I'll explain in the smaller time frames why the 6600 level is the key. It's very, very important, okay, for you to focus on the 6600 level. Okay, so that's basically what I expect in the coming week, and see exactly what happens there. Okay, now let's have a look at the FTSE 250. Now the other conundrum that we have is at the moment is the FTSE 250 is into resistance. Okay, but my argument here for the FTSE 250 here is that we had a potential HNS formation, but the right shoulder has exceeded 75%. When that generally tends to happen, we get a short squeeze and the market should technically move higher, and we should go and test the upper channel resistance here at 15,800. Okay, again that's a little Santa Claus rally. Okay, so that's something that needs to be taken into consideration given the fact that we've held this double bottom here, and buyers are certainly coming in, but obviously that is that resistance, so bear that in mind. Okay, certainly take that into consideration. Okay, so let's have a look at the FTSE 250 now. So let's go to a 60-minute chart first, and I'll come on to the micro time frame. So 60-minute chart. Okay then, so basically the name of the game here is the gap. Okay, FTSE will pivot towards the gap and always attempt to close every unfilled gap there is. Okay, so at present you've got an unfilled gap there at the 6600 level, and that gap must close. Okay, so today's price action itself has potentially created the head of the inverted head and shoulders formation. Again, this is hypothetically speaking now, folks, so just bear that in mind. This is all based on hypothesis, so hypothetical projection. Again, you know, the market is the ultimate king here, and it will decide and it will dictate which way it wants to go. I can't superimpose my opinion. I'm just thinking out loud, right? That's all I'm doing at present. Okay, thinking out loud, looking for, as remember, trading is like chess. Okay, you need to know your opponent's every single potential outcome. Okay, every move that he can make, you must study that. Okay, and then follow your variables based on intermarket analysis, which I teach via the mentoring program, to see if they align with that potential outcome. Okay, so say for example you've got X, Y, Z. Okay, so say for example you have a scenario here where this market will now potentially go down here. okay, and then could potentially bounce up here, okay. So what are the scenarios that could force that to happen? Scenario number one is obviously commodities need to get smoked. The Kiwi dollar, Aussie dollar need to get smoked, okay. And we need some bearish news flow. We need the Nasdaq to come off. We need the Dow, the S&P, etc. to come off, and obviously that will transpire. And then obviously we need the Dow, S&P, etc. when we get down here to hold support, and then obviously we bounce. Okay, so at present the S&P, not the S&P, sorry, the Nasdaq is solid as a rock. It's staying above 3,500. It's at 3,515 as we speak. Just does not want to fall. Okay, so if something doesn't want to fall, it's inherently strong, and that must be respected. And remember, the Nasdaq is the chief. Okay, so, and also given the fact that Shanghai closed flat overnight with positive potential positive data as well, so take that into consideration. The way the market certainly has interpreted it as being positive. It doesn't matter what the data is in the end of the day. It could even be negative, but if the market interprets that as positive, whether it be due to QE expectations and more stimulus, etc., then that must be respected. Okay, so right now you've got copper higher, commodities higher, you've got gold higher. That's obviously going to help the FTSE because it's a commodity index. Okay, so always take that into consideration. So yes, watch out for a potential pattern here. Basically, the name of the game here, the ultimate aim is to close this gap. Okay, so whatever pattern occurs, we need to close that gap. That gap must be closed, and I expect that gap to be closed this week. That's my basically forecast. Okay, that's based on my own understanding it. Okay, so let's have a look at a 10-minute chart now. Okie dokie. So yes, so keep an eye on this trend line here. Will be master support around the 6510, 6520 level. Keep an eye on that. Solid support. Okay, previous resistance equals support here around the 6516 level. Again, will be good support, strong support. Okay, there's another level that I can draw here if I wanted to, which is here where previous resistance equals support. So these are all potential support levels, so this is something that we need to keep an eye out for. Okay, obviously in the morning we had a contracting wedge, rising contracting wedge. We broke out, we broke down, we had a bearish channel. The market respected that, was obedient to it, and continued to sell off until it short squeezed higher, moved higher, given the fact that we got over the Volcker rule, and it's all about Japanese yen getting smoked. Okay, the yen pairs are into resistance. Aussie dollar, Kiwi dollar, both still remain bullish at present. Therefore, obviously the FTSE goes higher, etc., etc. And that's exactly what happened until towards the end. That was a good job. I actually exited the market, and I did explain that in the live chat room. Those of you that are not in the chat room, certainly pop down. I give live commentary, give my insight, etc., as much as I can. Try and tweet and share the most important market moving data, and again, this is my chat room here. Okay, so this is basically, we've got 20 odd 30 odd people in there all day, and just talking about the markets, etc. Anybody has any questions about setups and so on and so forth, you're more than welcome to pop into the chat room and ask me. I'm always there 24/7, and willing to answer and help out as well. So like I said, certainly pop down and have a look at the actual room itself. Okay, and hopefully that should help you as well. Okay, now obviously we've broken this channel. Now we are back at double bottom support. 6520 is solid support. Okay, if that breaks, obviously you've got the 6510 level which I've explained, and yep, solid support. Okay, so keep an eye out for that, and obviously this trend line here has been obedient, has been respected. Okay, 6545 is solid resistance, 6570 solid resistance. So there's two levels of resistance that we must be obedient to and respect for the interim. Okay, and that's it, folks. Okay, just give you an insight there of the FTSE. Risk on, risk off, wax on, wax off. Goodbye now.